Good morning. Thank you for your kind introduction, Michaela. Well, I kept the title of the original presentation. I nevertheless will try to make a bridge to my master thesis. I think as this topic has been broadly covered on Thursday, there's no use that I speak about the same topic again. Now, how can I bridge to my master thesis? I must come to the point where I say, how did I come to the topic of my master thesis? And there were two events that brought me there. The first one was an article where Bill Gates was like, he made a statement like, the innovation in renewable energy should be like something like the Manhattan Project for our generation. We should invest billions, tens of billions of US dollar public money in the research and development. And I thought to myself, nowadays there's such huge money in seed money that you can get for any startup in the world. How comes that he pledges for public money? So that was the first event. The second event is once I went to Bordeaux and I met kind of visionary man. His name is Jean-Luc Jacob. He invented a new type of wave energy converter. And I thought, and he was seeking, in fact, seed money. And when he was speaking to me, he said, "Can't you help me in one way or another? Advise me in that thing." And after 1 or 2 minutes, when we were talking, he was always repeating, "Yeah, the feed-in tariffs in Dublin, in Ireland, they are, I don't remember, above 200 euros the kilowatt, not the kilowatt, of course, the megawatt." I thought, well, he's always speaking about feed-in tariffs, but when will this engine be ready to work? And then when I asked him the question, he was like, well, I think maybe in 2 or 3 years. So how can you be sure about the feed-in tariffs in 2 or 3 years? That was the explanation, in fact, why there's really only poor seed money in this area, in the renewable energy area. Mainly it's private money, private offices. So I made that the subject of my master thesis. And I hope I can move forward. Well, the real title of my master thesis was Financing Renewable Energy Innovation in the EU in the context of wave energy conversion. But now, as I mentioned, poor seed money available because of everybody's counting on the subsidies. I now knew I had to take into consideration that there were no subsidies in my calculation. So I already had to think about how to value a renewable energy project when you have no subsidies. So how do we do that? Just to be sure that we're talking about the same thing, I just recall that from a pure financial point of view, the value of a fluctuating renewable energy power plant is in fact a random function of the resource distribution through time, so as well of your geographical site, of course, the state of the technology, which we summarize in a capacity factor, and then on the grid, market design and regulation, and that's the price that's becoming random suddenly, and site lead conditions, which gives you the duration of your power plant. So then I turned to my financial toolbox. I opened Copland and Weston and all this textbook, and what have I found as tool to value renewable energy project? We have something that is called the risk-adjusted discount factor. Don't demand that I demonstrate the formula, but I will try to explain it. So the concept is that you have the discount factor that you use has an add-on on the risk-free rate. And this add-on depends on on the general market, on the expectation of the returns of the whole market. In this case, we restrict our market on the whole renewable energy power plant renewable energy power plants that are currently feeding into the grid or into the grids. And we weight this premium by this beta factor. This is well known in the portfolio management theory, which is dependent on the covariance of the return of your specific power plant to all the other power plants that are feeding into the tariff. And you normalize this factor by the variance. So what is the conclusion of this? This factor, in fact, you will use a discount factor for your cash flow calculation that is dependent on the correlation properties of your renewable energy source or your specific power plants that are currently feeding into the market. As well, you can notice that the value of your new renewable energy technology or your new power plant, which you can interchange, I think, increases with the compensation effect that you have with other fluctuant renewable energy sources. I should add to that. As well, concerning the covariance and correlation effects, I think you can split them in two. You have one, the price correlation effect that comes eventually from the different grids that your power plant is feeding in. And you have the second, which is specific to your technology and to your power plant. So what I did then, I thought, well, let's check what is about the first source of correlation. The figures I plotted were, the period is from the 1st of January to October 2015. You see when I started to write my master thesis. It's a daily prices, and the correlation factors are between these 5 exchanges, which are the German Felix, and you have the Nord Pole, France, UK, and the Dutch grid. Well, there is a good news out there is that the correlation factors are not so high. So there is still a mitigation effect that you have there. I mean, the highest is, I was surprised about that, is France with the Dutch grid for some reasons. But as well, you can see that there's still some negative numbers. They're close to 0. So nowadays, or at that time, you'd be better off if you kind of mitigate your risk by buying maybe wind power in the UK and adding wind power in Germany. That would mitigate your risk, your price risk today. The second part is, of course, the part which concerns your technology or your power plant itself. I'm still speaking about correlation. Here I have, of course, to introduce the concept of the wave energy converter. It is a multi-column oscillating water column system. What is specific about his system, that he has a lot of these water columns. His engine is has three arms, is 30 meters long, each arms. So it has a huge diameter, and it doesn't mind in which direction the waves are floating. And as well, he's covering the whole length of the wave, which is important, as we will see. As well, what is very clever about his system, he managed to have a valve system here, which leaves the airflow that is created by the pistons here. When the water moves up and down, pistons move up and down, and create an airflow up there. And this airflow is kept by one turbine, always turning in the same direction. So this thing is like a boat floating on the waves. It's not fixed, it's like a boat. And the waves are coming up and down, and you have an airflow above the water surface. I'm sorry I couldn't get the whole engine as a diagram. I'm sorry about that, because it would speak a lot more. So, as we can mention as well, the power that you will produce depends on the up and down movement, so on the amplitude of your wave, as well as on the periodicity, because if it moves fast, okay, so you will create much more air movement as if it's moving slowly. So now how to calculate the power production of a wave energy conversion system? It's like nearly the same as for a wind turbine. There's only one difference. You are dependent on two variables, which is wave height and the periodicity of your wave. So rather than having only one variable in your function, you will have two variables. That's the only difference. So you will have a bivariate wave height and period distribution, and a bivariate power curve of the engine, and you just add both of them and get the power production on the specific site. And of course, the wave fate and period distribution is dependent on your site. So that will determine where you have to put your engine. Now, what have I done? I'm still in the correlation stuff that we have talked about on Thursday. I have taken a boy on the west coast of France. I've taken the data there. I got this is free available. I took the power curve of Hayes, which is the engine, and I plotted the data, and the results are as follow. I dissociate winter and summer for some reasons, and you see the line with Hayes. It's the production of 1 kV is 2,000 and 2,000 kilowatt hours in the winter, during the whole winter, and during the summer is 1,900. To illustrate the complementarity, I've done the same with PV production at the same site, which produces obviously less during the winter time and more during the summertime. And I added up both of them, and how comes I have nearly baseload there. So that is an excellent complementarity. As well, we have to mention that waves tend to be more in the night and during the early times in the morning. So you have really perfect match with PV. So that took me to the argument. I mean, we're still coming back to the interest rates that I use to calculate my net present value. I had the argument, well, if this looks like this, I will take a smaller interest rate to calculate my NPV value compared to other renewable energy sources. Now, next one. Well, in fact, there's something else that you should use when calculating this net present value. In fact, you need the prices, and you need the prices on the whole life of your project. That's something we haven't talked about on Thursday, because we always, when we talk about power prices, we are 15 minutes, 1 hour, the next day, the day ahead. But in fact, if you want to really value your project, you need the prices over the whole time of your project, which we don't have. So fortunately, in this case of my master thesis, I did the following. I did scenario analysis, and I got LCO values that I was able to compare to other technologies. So this problem with what we call the forward curve for my master thesis. But this is still a problem which is obvious nowadays, and I think we still will have problem to value power plants when we have no price guarantee. As soon as the price is random, you will have problem to value your power plant. So the results of my calculations, of my simulations, were always the same. In fact, because when you have a new technology, especially in the renewable energy area, you have only the price value. So either you're going to have good LCO values, or either you're going to have bad LCO values. So if you're in the prototype status, and if you're an investor, you say, okay, you're going to put probabilities on your outcome, and in the cases where your outcome is positive, it grows like exponentially, your profit. But in the cases where your outcome is below the levels of wind or whatever technology, you just zero, it's gone. So it's like a digital, speaking about option, either you have the big win or the big loss. So that's the problem, in fact, in the renewable energy story, because you have only this price story. So I advised him, don't call it the technology, but call it the platform. Call it a platform for what? Call it a platform for power plants, of course. Call it a platform for integrated in port facilities, because if you have already port facilities, you could think about integrating his technology in the concrete part of the port facilities. What else could we do with that? Call it a wave attenuator against coastal erosion, because one of the properties of the engine is, of course, when the wave is floating through the engine, the waves are dampened afterwards. So we're spending so much money on coastal production that we should definitely think about like have a joint product at this stage. And then of course your initial investment is definitely lower, and then of course the value of your power plant is definitely more. Well, what I was thinking about as well is you have all this aquaculture out there, and they're all claiming that when they don't move, they have so many waste. That's a real this thing you can have moving around in the sea. So why not use it for aquaculture? Because you could produce the energy to run the aquaculture stuff, the aquaculture farm. Well, and then we were dreaming a little bit, of course, like Jules Verne, and call it power station for e-ships in the future, because this thing is going to run over the oceans. So that was a short presentation on hydro-air concept experimental. Here you see the whole engine. And actually he got some money in February of this year. He got 700,000 euros from private persons. So that was my brief introduction on wave energy.
Thank you very much for this excellent presentation. I think this was really stimulating. Do you have any questions?
You had computed the formula on the risk factor, right? Risk factor, there is a percentage in the earlier slides. Can you do that?
Yes, sure. Good. This one, huh?
Yeah, I'm just on this one. So after computing this value, how do you, in your typical cash flow, you add up to our existing discounted cash flow plus you add up to this, or how do you relate this?
In your cash flow, you will like, of course, you have the initial cash flow. This is 0, so this is at timestamp 0. So this one you don't discount. Then you would have you have to discount all the proceeds of your renewable energy power plant at the different times. So you have, as I mentioned, you have to know the price at this time, and you discount with this factor. You use it as an interest rate factor. So you divide by 1 plus I. Times and no, by the time, yeah. I mean, this is, of course, is theoretical. It's a nice concept, but of course, to compute it is like you have to compute a lot. But the data is available. Yes.
How did you estimate the life of this new equipment for your project? Because it's not
the lifetime of the equipment. It's not me, but it's Jean-Luc, the other Jean-Luc, of course, who estimated. If you look at this engine, missed it. If you look at the engine, it's purely, I mean, everything which is in the water is aluminium. It's like ship, so it's only boiling, and that's one nice property of his invention as well. Is that you will soon have economies of scales, because aluminium is really standard. That what is expensive in his engine is the turbine, of course, because there's a lot of thinking of brain in it, and then you have, of course, to make tests in all this aerodynamic stuff, because you have to optimize the airflow, of course, that you are generating. So the lifetime is like, what is the lifetime for ship? It's 30 years or something like, even more, it's 50 years. So as well, his concept, in his concept, he wants to make it as such as you can replace any water column individually. So if there's a problem there, if you have a problem in one water column, you come out with a small ship, not a big one, because there's difference in prices, of course, when you do that. You come out with a small ship and replace this part.
So you had the cash flow analysis for like, what, 30 years for this?
I've done something else in my simulations. I compared to for example, to a company like Vestas producing wind turbines. And I said, okay, take my company in 3 years' times. How many engines am I producing? How many water conversion engines I'm producing? And then I compared my own turnaround with the turnaround of Vestas or other companies. I looked at the price-earning ratio on the market of these companies, and I valued my company with this price-earning ratio. I guess that was the only way I had, because as I mentioned before, I don't have the price curve. I cannot value this thing. I can make a comparative analysis, but I cannot value it as such. Yep.
Thank you very much for the interesting presentation. I have another question on the valuation. You mentioned that, like the engine will only be ready like 3 years from now. We don't really know what the feed-in tariffs will be at that point. So I wanted to know if like the way the valuation was done, if this is a way a way to kind of like assess the decreasing risk within the development phase. Like, I mean, like, at the beginning of the development phase, we don't know what the feed-in tariff will be. We don't know if the project will ever get to like financial close. And like the closer we get to financial close, the less risk or the less risk of failure the project actually has. Is that integrated in the evaluation?
No, that is an aspect actually which is very interesting, because that's why it's important as well to have some public money going into seed money, because as you mentioned, you have growing confidence when prototype after prototype, of course, and that's the path we should go, but I didn't in my master thesis. Yes.
In the table of energy that's produced, is that from the test case or it's the simulation?
You mean the anti-fair case where I added PV and or before? This is a power curve that has been calculated by Society High Tech. So it's a theoretical power curve on a non-existing prototype or a small prototype. And the wave data is true wave data from a buoy.
So I have some technical questions.
Oh. Yes.
Basically, so this is a floating device, right?
It is. Let me put it this way. Let me explain it this way. The waves are such as if the water is more than 35 meters deep, you will have waves that moves up and down, up and down. If you go in shallow water, you will have the waves makes like this. So his concept is to go. I take 35 meters or a bit more, so that I'm not too far away from the bottom, so I can attach a cable for the power. But he has a kind of floaters underwater that stabilizes his engine. So the engine stays at the same level and waves are going up and down. As well, he can regulate the amplitude of waves he will use. He to some extent wanted to limit the wave amplitude to 2 meters high. So if the wave would go like 3 meters, the last meter the engine would move up as well with the wave.
So is it anchored using
you have a flexible anchor for the power, and the other thing is just floating. It's just floaters that keep your engine stable.
And wouldn't it move back and forth in this direction, horizontal direction?
His intention is not to go in shallow waters, but to keep 35 meters. Then you have to use other technical solution if you go in shallow waters.
And did he think about the maintenance costs of, because you have to monitor this?
Yes, electronically. You monitor this electronically.
And if there's a problem, you go change it.
Mm-hmm.
And so there's cost involved in just approaching the device and changing it. And it contains labor. It contains, so the maintenance cost.
And compare, I don't know if I have it here, and compare it, if you look at other engines, you will from scratch say, this is the cheapest you can have. Because you have, I think it's Carnegie, the Australian company, which is actually listed on the Australian Stock Exchange. They have kind of an engine, they're working for more than 20 years, I think, on it. It's under the water, it goes up and down, and it's hydraulic. And if you think, if you have a problem with that engine, you have to dig down, to take it out, because it's very heavy, and you have to go out with a big ship, you carry it back home on the port, and you fix it there. Here you fix it in the sea. You fix everything. You go with a small boat, and yeah.
The other possible problem is a resistance from the ecology point of view. The governments will have to be convinced that it wouldn't cause any problems to the ocean environment.
I mean, compare this to a wind turbine. I mean, you know.
This is small. You have another question?
Yeah, one more question.
Hmm.
Is the cost of transmission cable within the sea, let's say if you want to do this commercially, you have to connect it to the grid.
Mm-hmm.
Did you consider that in your cost?
Yeah. I haven't considered it. Again, if you take the German example, for example, where the grid operator has to do that, and it's again from the hardware point of view, it's much more for a big wind turbine than for this engine. This is, I don't know how I do that, but this is the Carnegie engine you can see. Yes, that's fine. Oh.
Es ist was ausgeblendetes, kann das sein?
Ja. Das ist, weil ich die Präsentation limitiert habe. Some more questions?
Yeah, but it's visible. From
Just maybe to the last one to close it, because we are already.
Same button.
Just one question. I mean, what's your opinion personally after spending so much time to study this kind of renewable energy? Do you think this renewable ocean energy we will have in the future?
Well, I think considering complementarity with PV, I think it's at least something that we have to consider. I think especially for islands, because it could be a real nice product for islands where you have exactly the deepness that you need for the engine. In most of the cases, you have sun, and the other electricity production on islands or importing diesel or things like this is very expensive. So I think this is a nice case for islands. It is a nice case for Europe as well, because on the west coast of Europe, which is the west coast of Ireland, the west coast of France, of Portugal, of Spain, we have really nice resources there. So this could be a good case for Europe as well.
Thank you very much.
Thank you.